All right, let's look into the crystal ball, shall we? Today, we're jumping ahead to crypto's next mega cycle. We're going to dig into what some of the top analysts and on-chain experts are predicting for the years 2026 to 2028. So, the big headline here is pretty clear. A massive wave of change is on the horizon. And what experts are saying is that this isn't just going to be another market cycle. No, this is predicted to be a fundamental shift, one that could weave crypto deep into the very fabric of the global economy. So, in this explainer, here's how we're going to break it all down. First, we'll look at the global economic stage that's being set. Then, we'll zoom in on the futures of Bitcoin and Ethereum, see how this all connects to our actual daily lives, and finally, we gotta look at the potential roadblocks that could stand in the way. You know, when you boil it all down, the predictions for this period really come down to three powerful themes. First, crypto goes properly mainstream. We're talking beyond the bubble. Second, it deeply integrates with traditional finance. And third, the space sees the largest flood of capital it has ever experienced. It's a combination that could seriously dwarf anything we've seen before. Okay, so you might be wondering, what's laying the groundwork for all this? Well, the answer isn't just found inside the crypto world. It's actually in the bigger, broader global economic environment. So let's take a look at the setup. Analysts are pointing to what really looks like a perfect storm of factors. They're predicting a period of lower inflation and stable interest rates, which historically is a fantastic environment for growth assets. Now you add to that the continued weakness in traditional fiat currencies and a global push toward clearer, more defined regulations for digital assets. So, see, it's not just one single thing. It's the combination of all these global economic shifts that analysts believe is creating the perfect launchpad for crypto's next massive leap forward. Okay, with the stage set, let's talk about the main character, Bitcoin. The predictions here aren't just about price going up. No, they're about a fundamental change in Bitcoin's role in the entire global financial system. And of course, this is the question on everybody's mind, right? While nobody's got a working crystal ball, analysts have laid out a few different scenarios, and they're all based on different levels of adoption and investment. Let's look at the breakdown here. On the more conservative side, estimates see Bitcoin landing somewhere between $150,000 and $250,000. Now, moderate predictions, which are banking on much stronger adoption, push that up to the $300,000 to $400,000 range. But then you have the really aggressive scenario. This one is driven by massive, sustained inflows into ETFs, and it sees prices hitting $500,000 or maybe even more. But look, the price is really just a symptom of a much deeper shift. The big idea is that Bitcoin is expected to mature into a true macro asset. I mean, we are talking about sovereign wealth funds, entire countries adding it to their reserves, more corporate treasuries using it as a hedge, and Bitcoin genuinely starting to compete with gold for a spot in major institutional portfolios. So if Bitcoin is becoming digital gold, what about Ethereum? Well, Ethereum is predicted to become the absolute bedrock of a new digital financial system. Its whole ecosystem is just poised for a massive expansion. Experts really see Ethereum cementing its role as the main settlement layer for the digital economy, and that means a dramatic growth in staking, becoming the go-to hub for tokenized real-world assets, and serving as the core infrastructure for new tech like restaking and all the layer 2s that help Ethereum scale up. But here's the thing, it's not a one-chain-takes-all kind of world. Analysts are predicting a pretty clear division of labor. You've got Ethereum and its layer 2s like Optimism and Arbitrum handling the heavy lifting, the core infrastructure, the settlement, and onboarding the next huge wave of users. And then you have the alternative high-performance chains like Solana, which are seen carving out their own niches in things like super-fast payments and consumer-facing apps. This brings us to what might be the most practical and maybe the most exciting part of this whole forecast, how all this technology actually starts to merge with our day-to-day financial lives. So analysts see this happening through four key developments. First up, DeFi gets regulated enough for traditional banks to actually start using it. Second, we see the tokenization of real-world assets. You know, things like real estate or bonds put on-chain become a multi-trillion-dollar market. Third, stablecoins just become a normal part of life for payments and transfers around the world. And finally, we get to the really futuristic part, the convergence of AI and crypto. And this is where it starts to sound a little like science fiction. This quote here really captures it. You have AI agents operating directly on the blockchain, managing investments and executing complex financial moves all by themselves. I mean, that is a profound vision of the future. So the big point here is that this next cycle isn't predicted to be just about hype and speculation. The real driving force is expected to be actual real-world utility, institutional integration, and some serious technological substance. Now, okay, this all sounds incredibly optimistic, but a good forecast also has to look at what could completely derail the whole thing. So let's take a minute and examine the potential challenges on the horizon. It really is the critical question we have to ask, because despite this incredibly bullish outlook, there are some significant risks that analysts are keeping a very, very close eye on. The main worries really fall into a few key buckets. First, you've got harsh regulations in a major market that could just bring the hammer down on innovation. Second, this explosion of new chains could actually fragment the market and spread capital too thin. There's also the classic risk of repeating past mistakes with too much leverage in the system. And of course, security is a constant threat. Hacks and vulnerabilities are always a major concern. So at the end of the day, the expert consensus points to a really powerful cycle ahead, but the path to get there is probably going to be pretty bumpy. Navigating these challenges will be just as important as jumping on the opportunities. All right, so let's do a quick recap of the key takeaways. First, a supportive global economy is creating the foundation. Second, Bitcoin is forecast to become a true institutional-grade asset. Third, Ethereum's ecosystem is set to become the core plumbing for digital finance. And finally, the next great frontier seems to be this integration with real-world assets and artificial intelligence. And that leaves us with the final big question. The roadmap has been laid out by some of the brightest minds in this space. But of course, the path is never certain. The next few years are going to be all about watching to see if this powerful, incredible vision of the future actually becomes our reality.
Subscribe and visit Web3 Newswire for visibility and credibility of your Web3 projects.